4250, anybody? It's not a major, it's a minor, a very minor. Minor what? Well, stump the crowd. I'm not going to give you the answer. So 4250 holds, and the market takes off, and when it breaks out, we get a little quick retest of the breakout, then it's off to the races. So we had a good trade in this area, produced 4 ticks to 8 ticks. Did not produce any further. We knew that 43 was support. It had to come out to stay short, and it didn't. So off to the races. So we're into our 1255-57 area, and the market. We'll see if we reject the 55-57 area. If not, it's back up to 62, 63, 64, 65. And we do have better than expected economic activity news this morning. So the fundamentals are for the buy side today. In scanning the news headlines, looks pretty grim out of Europe. I mean, it's pretty. Somebody's got to come up with $3 billion. Okay, I had some requests from some new people on this institutional volume filter, and the institutional volume filter is extremely fast, and it interjects a lot of noise into the equation. And if you don't have the requisite trading skills, then it's pretty hard to see how this filter or screen can work for you. Now, for some reason, I cannot get the ability to mark this window up, so you'll just have to follow me through. On the top left-hand corner, it says lots from 1 to 1,000. If you want to see how the entire market is trading, that's where you set it. If you want to filter and you want to see where the large players are, you can change the 1 to a 50. If you want to see all the action less than a 50 lot player, it's 1 to 49. These bars are colored. It does show you the dome of the size of the bid and the offer at each price, 5 up and 5 down. If you want bought volume for the day, you check off the today's square, and you got the bought and the buy and sell volume for the day, and you got the total of 1.2 million. You can see 51% in the day session has gone from the buy to the buy side, 49 to the sell. That's all it takes to run a market up. It doesn't take any more than that. So if you want to filter this, now the way I've used this screen is that if I'm at potential support or resistance, and let's just go ahead and make this a 50 lot player, you got this clear button right in the middle where it's trading. And so if I'm at potential support or resistance, I hit the clear button, I wipe out the screen, and then if I'm thinking about buying it, covering a short, I want to see if it's all pink, I'll stay with the trade. If it's mixed, I'll get out. If it's all blue, I'm definitely out. So every other one right now is pink or blue. And you can see we're getting a little more volume to the sell side. If you want to see it for the entire, not for the entire market, but for the 1 to 49 lot player. There you have it, and you hit the clear button, and it's all blue. If I were short, I'd be a buyer. I'd just cover it, and I wouldn't think any more about it. So it's an extremely fast screen that is good or as bad as all that noise is. Some people have figured out how to use it, but it's a mover. And I think for a beginning trader, it will increase the fog factor. It will not limit it. Got to figure out how to eliminate noise when you do all of this. It's what's germane, what's pertinent, and you never really know for sure until you go back and look at it. And we think that we can be extremely precise because we can measure all of these goodies in some way, shape, or fashion, but you really can't. And the strength of our way of looking at the market and the strength in this room is it comes from the F2 screens and the F1 screens, higher, lower, or sideways. And that's where the money is made. Greg, you go up to trading, you left click on, you highlight, you left click on trading, you go down to tools and you see institutional volume filter, you left click on institutional volume filter and you're in. But I think it'll drive you bat, Greg, where you are right now. Now, down the road, you might be able to make some use of it. But that's not one that's going to speed your trading prowess. It's one that's going to slow you down. Okay, when we left this trade, we said there's nothing wrong with the trade, but if you want out at 43.50, you got to take yourself out now. Or 45, wherever we entered it. I believe we got in it. Maybe it was 46 and a quarter or something like that. Let me see. $45.50 on the 1018 bar. So we're short right here. Now, you really don't know if you're wrong until you take out this high. And if you want a tighter stop, you could be taking out this high right here at 47 and a quarter. So the premise is that we've had a retest of this high and it's held. So your stop has to be above that line. And you really don't know you're wrong until you take out that high right there. And that's where we are. So the market trades down, stops at 43.50. You miss your exit for 8 ticks by a tick. Comes back up, tests 46.50, which is off the case. It goes 2 ticks above that bar's low. Comes back down, hits 42.50. As Scott Wagers says, a minor market number. And it holds. And so when you take out that bar's high right there, that's as long as you can be short. So if you're in at 45.50 and you're waiting for the trade to develop, you're out at 44.50. You've made 4 ticks. Market breaks out, retests the breakout right here. Could be long at 49.50 and the market trades up to 54 for another winner. And that's how you have to play these. This was a potential retest failure. Now it's a reverse RTF. And it's off to the races. And we did have bullish news. And this player has been consistently on the long side. And we're 42,000 for the entire market. So got buying going on. And it's based primarily on the news. Okay. The money is made on the F2 screen, and you don't have to know who, and you don't have to know why. You just can see that they are. So this morning, we had a day and a half of selling. Everything was set up for a short, and what did we get that changed the whole darn thing? We had better than expected industrial production and capacity utilization numbers. So the news changed. So while we had a great setup for the short side, it was down to the news. And on the focus is unemployment and economic activity news. And if economic activity news, i.e. durable orders, factory orders, housing starts, permits, come in better than forecast, this market can trade higher. I mean, there is no magic in that. So the news changed everything. So while we have B's coming down, the news changes it. And we weren't able to crack 40. 40 was our first little band of support. Then 32 to 35 was our second little band of support. Support holds, and we're up off of better than expected news. Not much you can say about that. What's interesting is that the E-mini's up and the note has done nothing. So why has the note done nothing? Well, it should be selling, given what's going on in the E-mini. But the note has done nothing because of the potential problems out of Europe. And when you look at the debt figures and you look at the offerings that are out there, GDP ratios, if you put the whole entire EU together on their debt to GDP, it looks very similar to the United States. It's about $14 trillion, $15 trillion, and it takes $3 trillion to clean up the mess. And some people are saying the $3 trillion is uncollectible under any circumstances. So who's going to write a check for $3 trillion bucks? Now, while the U.S. banks have less than $50 billion exposure to Greece, when you throw in French banks and the rest of the pigs, the number gets a lot higher. So it's there. Now, I have eliminated the day session, the night session from the look on this market. And you can see that we're just kind of in no man's lands right now. E-mini's stronger. This market should be lower. The news was against this market, yet we're not lower. So that's the premium for EU debt. Yeah, Bill, fade 55, 57, see if you can get through 50. If you can't get through 50, get long again to see if we can take out 55, 57. So 50, a nice round number, will bring in opposite activity. Okay, we haven't broken the initial balance area on this contract yet. And based on what's going on in the E-mini, you would anticipate it breaking lower, but it hadn't happened. So here we are, just kind of motoring sideways. Now, Peter asked me to go over a specific trade situation set up that puzzled him. And the trade was off the 920 bar, which is right there. And Peter's actively getting back into trading right now. So Peter is short at 19. And when the market doesn't break, he takes himself out at 19 right here. And he said, well, I didn't know if I had a good trade or a bad trade at that point. and my belly button told me to come out of it. So here's that first little correction, and the first correction is profit taking. And you don't know if you've got a good trade or not in that situation. You just know that somebody's taking profits. This held. We break this bar's low right here, the 920 bar's low right there. Somebody takes profits. And we got a real skinny bar there. We had nothing in that bar that told us that this market was going to break. So it's the problem we face continuously in the room. It's that first move versus the second. Now, the mature way to handle this is that you're going to probe and see how the market takes your paper. And that little skinny bar right there, the market didn't take that paper very well, did it? So you can take yourself out for a scratch and start the game over. But if you do like most beginning players do, it's like, damn, that didn't work. I'm not going to try that one again. And you miss the second leg. And it's the second leg where the big money kicks in, because they have confirmed a top. So you say, great, I've got a retest failure right here, and you do. I got another one right here, another RTF. Obviously, the second one worked better, but there's nothing wrong with this trade right here. Now, if you take yourself off on these first legs, you've been aggressive. If you can just mentally shift gears and say, I'm probing, then you have to be able to catch these moves. You have to be able to come in for that second leg and take it. And as a beginner, you probably aren't capable of jumping in and out that quickly. You want to think about it a little bit more. So where are you wrong on this trade? You're not wrong until you go 2 ticks above this high. And up until then, well, this trade isn't developing quickly. It might go higher. It might go lower, but there's nothing wrong with that trade until you take out that high. It's just like that trade on the E-mini. There was nothing wrong until we took out 47 1/4, 47.50. I forget where the number was. So that's the part of learning how to trade and the dilemma of trading that you just kind of grow into. Okay, right here's a nice retest of that high, plus or minus a tick. You're in the game at 19 again. Here's the first leg, and there's the second. And if you're John K, waiting for the second leg right here, you got left at the station. So again, we think there's a lot more precision and accuracy to the trading than there actually is right there. I mean, a lot of good trading and riding trades out, and the rest of it is posing the question, is there anything wrong with this trade? Other than the fact that it hasn't developed instantly. You know, Bill, I don't take out the overnight. I just leave it there and look through it, but I do split out the day session. I think it adds or gives you some extra information.